Hey, what's up, my YouTube fam? I'm back. This is Larry with Invest and Build Your Credit and Wealth. And today we're going to be talking about IPOs. And as a retail investor, should we be buying IPOs on the first day that it hits the market? Been doing a lot of research, trying to go in just because it's just been a crazy year with IPOs. And we're going to talk about, should you be buying an IPO on the first day that it's released to the retail investors? Why you probably should wait before you buy and get into an IPO. We're going to talk about a little bit the processes of IPOs because a lot of people are not talking about this. And I think it's something we definitely, as retail investors, need to understand before we get in and just jump into an IPO on the first day. But hey, we got to get into the commercial. Hey, I appreciate all my new subscribers coming to the channel. Hey, it's been an amazing year, 2020. It's been some really, personal things down, but on the financial side up. So it's been a crazy year, 2020. And, hopefully 2021 for all of us that are viewing me or YouTubers, creators, whatever you want to call, hoping 2021 to be a great year for all of us. I want to thank all my new subscribers that have been coming to the channel. Hey, I appreciate you. I promised you I would be getting more videos out, and I've really been pushing more and more videos out. I have been neglecting my credit folks on my channel. I do need to start putting out a couple little help people with building their credit. Because credit, if you're not taking care of your credit, you can invest your money. And that's why I kind of do both. And that's why the name of this channel is Invest and Build Your Credit and Wealth. Because if you can build and have a good credit, it allows you to have more money to invest in yourself. And if you can invest in yourself, then you can grow your wealth and continue to build on the empire that you're trying to build. So both of them are really important to me. But I definitely need to start putting out a couple of videos to kind of help people with how to put some positive things on their credit, how to get some negative things removed off their credit. And you can always ask me. I am a licensed credit repair expert, but I understand investing and growing your wealth is something that's definitely very important, and it's very important to me. So I just wanted to get that out the way. Hey, subscribe to my channel. I'm really trying to get it pushed out. Please hit the like and subscribe, man. Like the channel. It's all it takes is boop. I like the channel. Just from the effort that a person puts in front of you to put this stuff together. Let the kindness of your heart just say, this dude is putting in some work. At least he's trying to bring. And then let me just like his video. We all need to learn how to start helping each other reach our goals and aspirations. Don't hold anybody back. Be the tool to help him reach his plateau. It will always pay back to you. So I'm big on that. I'm a big believer on that. That's why I'm always about helping other people. It's important to me. But thank you for coming to the channel. Please subscribe to the channel. Hit the bell for notifications. Hit the like. Do all those type of things to help, YouTube push my videos out to a broader audience. So we got to get it in. I'm trying to be like the Terminator. I'm back. So, I appreciate all that. But we're going to get into this retail investor. There's some things I'm going to be looking at the screen because I definitely have to take some notes and some serious notes. But it is so important that as retail investors, we need to understand about these IPOs. Now, these IPOs that came out this past week, you had DoorDash and you had Airbnb. I think sometimes even as YouTubers and retail investors, we're our worst enemy because we hype a stock so much. We hype that stock so much that we could push a stock up well above, what its evaluation says. Just because we get people believing in it so much that we get more and more people buying in and kind of hurting our own evaluation, especially in the beginning, right? We can believe in a stock. There's nothing wrong with that. You can believe and invest in a stock, but when you're investing in the stock market, it is all about timing. It's all about timing, and we're gonna talk about that. So we're gonna talk about what is the goal of an IPO. So the IPO goal, the first place is to raise certain amount of capital, right? It's all about raising capital for the business. So it sells millions of shares to institutional investors, is much more efficient than finding 1,000 individuals. And that's just a hypothetical situation. So the first day of an IPO, it is all about the institutional investor. It is giving them an opportunity, right? So for y'all that don't know, an IPO stands for initial public offering. Now, I don't want to insult anybody, but I want to make sure everybody understands what IPO stands for, right? And there's reasons why companies, do an IPO. It's obvious. Either they're trying to upgrading, expanding, paying debt, exiting strategy, financial windfalls. Some of the main reasons. There may be other reasons. They may feel an opportunity. This is a great opportunity for us to raise money really fast, right? So for Airbnb, even though Airbnb, we all believe in it as a company and what they're doing, but Airbnb has been struggling this year because of the pandemic, right? So, but because of the belief of the company, because we all believe in Airbnb, and a lot of us has used Airbnb and understand what Airbnb is all about, we wanted to be a part of that, being into and investing into the company, right? So some of the other things you got to understand with IPOs, even though the institutional investors have a lot to say about the share price once it reached the retail investor. That's what we're gonna be talking about. And we're gonna go over some things. With the latest S1 filing, Airbnb they were aiming their price targets for $44 to $50 in the beginning. Then it changed. It went up. I think it went up to 55 to 60. Then it went up to 60 to $68 when they were the public offering, right? So, that was some of the things that kept going up because people are so interested and feel like this is one of the hypest IPOs coming out this year. The benefit of having an IPO, other than raising capital, is when a company stock goes public and it attracts media attention, right? That's the other thing. Now, I'm not saying Airbnb needed media attention, but I'm saying a lot of times they bring it on because we're all pushing this stock because we believe in it. Free media attention. This amounts to free advertisement, right? Free advertisement for the company. Also, any publisher of the stock market information list and track public companies, which means that going public can get a company name in the books. So, that's some of the other things. Like you're really putting this in front of everybody. Free advertisement. And we're doing, even as YouTubers and creators, we're out there hyping the stock, not even understanding that we are hyping the stock and giving it free advertisement, right? We're pushing the stock out there, telling everybody, hey, this. We're bringing the stock more in the beginning before any evaluations, whatever evaluations they have. Some of these stocks are hitting IPOs way above evaluations, right? That's why we have to be smart about how we're investing and what our entry point is coming in to these IPOs, right? Now, let's talk a little bit more. The day before the stock are issued, the underwriters and the company must determine the starting price for the stock, the amount of the shares to be listed. A target price will have been set early on in the process, but IPOs are rarely stable. right? That's why you seen when it started at 40, I think 40, 45, 48 or 40, 48, and it went up a little bit to 50, then it's up to 60, 68. So you see the interest in it was being more, which was driving the price. While the vast majority of newly issued went to big mutual funds, other institutional investors, Airbnb reserved 238 million worth of stocks for its host, according to company filings. So just think about that. The amount of stock they held in institutional investors, companies, other people, high profile people. And we're going to talk more about who are these high profile people, right? So mind you, they still got that stock at $68. But as a retail investor, we did not get that price. And that's why they release it to them. So just understand the institutional investor the institutional investor and the retail investor, we are already giving him a profit. He had already doubled his money, because if he bought that at 68, when it was open to us, it opened at $141. Think about that. So we sometimes, again, I think we're our own worst enemy when we're driving something. As retail investors, we have to be, and I'm just keeping it real, we have to be smart on our entry point. This stock is not going nowhere. And for a lot of us that understand this, we understand there's going to be a pullback. That the excitement is going to die down and there's going to be a pullback. Airbnb has already pulled back a little bit. What is this? S3 AI, ticker symbol AI, has already pulled back a little bit. Those stocks are going to pull back. The hype in it, everything is going to come back. The stock market is going to readjust. And then that is our entry point to get back in, right? So we're going to continue on. These shares have been remarkable, ran up after pricing at $68, right? They ended the first day trading up 112% at $144.71. It ran up 112%. So think about it. If you bought it, where did you get in? Where is the level of profitability? Now, some of us believe this stock is going to be over 200. Some of us believe it's going to be over a $300 stock long term, just because the value they bring. We like to travel, the accommodations about Airbnb. I have an Airbnb. Again, shout out to my cousin Stan Coleman. He has an Airbnb close to downtown San Antonio. I've stayed there. Remarkable, right? So I understand the value of them. So it's not like I don't want to be invested in the company, but I don't want to limit my profitability in the company by getting in the company at an evaluation that's way too high and a stock price that's way too high to limit my gains, right? So we want to be really smart about our entry point. Now let's talk about the retail investor, right? The retail versus the institutional investor. The IPOs are typically broken into two branches of demand: institutional and retail. Institutional investors typically receive a lion's share of any IPO allocation. I mean, they get a large portion of the allocation. Historically, institutional retail split is 90-10. 90-10. Typically, as a retail, we're getting 10% of the pie out of 100. Now, these retail investors are buying large amounts of this share at $68, $70, $72. So this is why when it hit us, it was $141. The institutional investor know this is a great investment, right? So they've already doubled their money. So if they got in at 70, it ended at 144. They dropped $1 million in this there. If they could buy that much, they just made $1 million profit in one day. So again, I just want to make sure people are clear about how this stuff works. Because nobody really talks about this. We talking about, hey, it's coming out on this day. The IPO gonna be released. We all sitting around on in front of the computer on our phones, putting set prices in to get in. And then what happens? We don't even get in. I did a set price at 75, so it didn't get filled, right? So then I had to sit back. I was like, now when it hit, now do I really want to get into this stock at $141 on the first day? I bought one share. That was it. Just to see. I just bought one share. Just put it on my portfolio. But I was not going to buy a whole bunch of shares. It didn't make sense to me, right? I just bought one and I left it alone just to have it in my portfolio. And then I just started dollar cost and averaging it down. It's easier to dollar cost average one share at that price than if I bought 10, 12, or 15 shares. I did not want to do that, right? Media coverage. A deal with receiving a lot of media attention that has involved in well-known companies is often significantly oversubscribed. This means that the demand for IPO shares for far overweight supply. In such cases, your odds of receiving an allocation of shares get greatly reduced. We may not, as a retail investor, didn't get greatly reduced. It got expensively raised up, which means it wasn't that many shares. They only have so many shares at the beginning. So if they started off with 7 million shares and at the end there was only hypothetically 5 million left, and that was left to us institutional investors, now the quantity versus demand is really offset. Everybody wants it. It's not enough. So what happens to the stock price? It goes up. So we need to really, again, understand IPOs. And I think this is an important class that we all should be giving, all of us stock people. That some of the seasonal stock people, to me, really should be putting this in front and letting us understand about IPOs. And I follow some, I follow some well-known stock gurus, and I haven't heard any of them really talk about IPOs and breaking them down to us. I mean, maybe they understand it and felt like maybe we already do. But as I got into, and I was like, it's got to be a reason. I need to learn more about IPOs and understand what is going to be my strategy when an IPO comes out. And there are more coming out this year. There's some big ones coming out January. So, I think it's important going into 2021 that we don't limit the amount of gains we can have stepping into these IPOs. Now, there's other IPOs. There are different types of offerings. Certain types of IPOs, such as Master Limited Partnership, there are MLPs, Real Estate Investment Trusts, REITs, and Business Development Companies, BDCs, can be more retail focused. So institutional investors are not vying for large pieces of the offering. Therefore, retail investor typically has a better chance of receiving an allocation of shares of these types of IPOs. So Master Limited Partnership IPOs, Real Estate Investment Trust IPOs, Business Development Company IPOs, as a retail investor, those IPOs, we have a greater chance of getting in them at what the price what the target price is when they first start, right? So again, we have to understand IPOs and the different types and what is our investment strategy when dealing with these IPOs. In addition to these factors, your brokerage firm will have its own criteria for determining who receives an allocation for shares. Each customer who wants to participate in an IPO is evaluated and ranked based on his or her assets to revenues that generally for their brokerage firm. Typically, consumers with significant long-term relationships with their brokerage firm receive higher priority than those with smaller or new relationships, right? So The relationship you have with the brokerage as an institutional investor, you're going to get in. Stockbrokers usually offer access to IPOs to higher volume traders, right? With no history of flipping stock and trading with long-term relationship with brokers. After the initial offering, the stock hits the open stock market where they begin trading at a price set by the market force. The IPO stocks tend to trade at a very high volume on the first day. All right. Think about that. They trade at a very high volume on the first day. So in my opinion, the first day for us retail investors is not the day we should be buying in to an IPO. We should not be getting into an IPO on the first day, right? And I'm not saying that's 100% truth all the time, but I've been following and going this year with these IPOs, and it's been the same thing every time. They have a target price. When it hits the stock market, that is not the target price. That when we get it, it is much higher. If the price is set too high, some of the down frames for setting the price too high, this is if they set it too high, not that it increases up that high. So I don't want y'all to get confused when I'm saying this. If the price is set too high, you won't get enough demand for the stock price, and that will drop the price after market, right? The price could tend to drop after market because the target price was too high. So that's something that you may want to look at, especially if the price drops after market. It's probably because they set that price too high and the demand wasn't what they expected it to be. Many IPOs do poorly, dropping in price the day of the offering. So some do poor, right? But just think it, if they do poor the day of the offering, they're going to drop the price after the next day after market, after the second day of the stock, because it didn't reach their demands on the offering day, right? After about a month, the underwriter issues a report on an IPO, which is always positive, right? It tends to give the stock an insight boost after 180 days have passed. People who have held shares in the company prior to it going public are allowed to sell their shares. Right, so that's after 180. So they're holding on to their stocks 180 days. So think about it, 6 months. That may be another entry point, because now these guys that have made all this money, remember, they got in the stock at $68, $70. The stock price now is 140, and maybe because it maybe get up to 160, 180, $200, they take profit. Now, what happened when all these institutional investors take profit, right? Not saying they're going to sell their whole, their whole pot. They maybe, if they bought 800,000 shares, maybe they sell 300,000 or 400,000. That's still a large amount profits that they'll take. What happens to us retail investor, that stock is going to, because of the sell-off, stock entry point for us retail investors to get back in. The stock will resettle, probably start gaining more people to get back in it. So just understand, with these IPOs, you have to have a strategy and understand the IPO. Understand. And again, I just think sometimes we're our worst enemy. We hype a stock up for everybody getting. All we're doing is driving demand. And then once we drive demand, then what are we doing? We're pushing up the stock price. So as you can see, several factors influence how IPOs are allocated. Knowing how to read the IPO perspective, red herring, and understanding how the others factors at play can help you set realistic expectations for your chance to receive an IPO allocation. It is also important to note that every IPO is different, and the market conditions can play a role in how the shares are allocated, right? So, just going over all that, hopefully, I kind of bring some light about IPOs, about us as retail investors. when we may want to get into an IPO, really start looking more into, is this stock overhyped? Is it just look like the demand is really going to be high? Just listening to these institutional investors, is this something that they're definitely going to be getting into and then buying in, because they get the first dibs? They get all the first action at a target price. And then us retail investors, we getting a little stuck. We getting stuck. We getting stuck. And then, it's raised up 100 and something percent, and we're trying to get into the stock. Then all of a sudden there's a sell-off. Now we gotta continually dollar cost average, because now the stock prices drop, so we got to get in. But we have to be smart about how we invest in these IPOs. And hopefully this class, leave a comment. Do you agree? Do you not agree? Leave a comment. What do you think about, when should we be getting in IPOs? Do you think what I'm saying is off target? Give me some feedback. I sat around and I was a little, I wouldn't say I was upset. I was disappointed, as a retail investor, because we know how great this stock could be, and then come in and have to come in at a price point that high, right? Especially when we know the target price was set down to $60 to $68, right? And then same thing with DoorDash. I mean, I'm not big on DoorDash just because I don't want to get in DoorDash, because it's COVID. It's kids at home. They're coming in when it is at its peak. That's why they want to get into it, right? I'm not going to get in DoorDash until I see once COVID comes back. Once COVID's come back, Lord have mercy. When COVID go away, we start going back to work. Kids start going to school. They start getting fed at school. The home, they're not ordering food at home. Everybody's back at school. College students back at school, going to the college cafeteria. Shit, I got some good food in the college cafeteria. Going there, only reason people gonna be doing is just, it's gonna dip back down, right? They came in at a great time, and a lot of people are hyped because how well they're doing now. But I'm looking at what's gonna happen when this stock, when everybody goes back to work, everybody is traveling again, everybody wants to go out and dine. They're tired. They don't want to eat no fast food. They don't want to eat that. They want to go out, sit down, and have a nice meal somewhere. What is going to happen? Are their quarterly reports going to reflect in 2021 as they did in 2020? I'm not sold on that. So I'm not, at my point, I'm not investing in DoorDash. If I missed the boat, I just missed the boat. But I'm going to wait until, probably until next year sometime. Or if there's a really big dip, where I think it's a great entry point to get in. But where it's at now, no way I'm not even going to touch it. But anyway, hey, I appreciate y'all. Please subscribe to the channel. Please. Thank you for all y'all hanging out with me. Just continue to roll with Larry here on Invest and Build Your Credit and Wealth. I'll be back with another video for y'all. We're going to talk about some other stocks that I think will maybe some good stocks. They're not IPOs though. Let's get back at you, and I'll be back. Thank you for hanging out.